Hey guys, Tony here. Let's take a moment to take a deep breath and be thankful that Q1 and Q2 of 2024 are behind us. Things are looking very bullish for the domestic and global box office for the rest of 2024. In this video, though, I want to review with you the Q2 box office and my estimates of what that is going to translate for AMC into net income and cash burn. Let's go through the numbers. We ended up the Q2 domestic box office around $1.945 billion, bigger than Q1, but obviously lower than Q2 in recent years. And again, that was due to the actors and writers strike, which we started warning you guys about in the middle of 2023, how it would impact this year in the first couple quarters. So these numbers were disappointing, but not unexpected. Now we are beginning to transition into a normal second half of the year and a much better 2025. We'll talk more about Q3 and Q4 and the much better box office in some future videos. In this video, though, I want to go through how this box office number, $1.9 billion, is going to affect AMC's net earnings. Let's go through my spreadsheet, look at the cost structure for AMC, and talk about what you guys can expect for net income from AMC in Q2. Looking at column I here, Q2, $1.945 billion. The next thing that I look at is what was AMC's total capture of the global box office. And I use that percentage underneath the 1945 to extrapolate out AMC's total revenue based off of a domestic box office number. You can see I have 31%. That is an estimate, and the pink numbers going off to the right are the percentage of total box office that AMC captured in previous quarters. The average is just over 30%, but it does vary from quarter to quarter. And since we have that variance, I'm going to give you guys a range for net income using a low of 29%, my middle number of 31, and on the high side, just under 33%. Using that range of 29 to 33% and looking at the income streams, including admissions, food and beverage, and other, which includes everything, including the retail popcorn, private label, chocolate, credit cards, all of that is included from AMC in one of these buckets. We get a total revenue number between $995 million and $1.1 billion. I'm going to go with $1.06 billion for my estimate, using the middle number of 31% of the total box office. We have to subtract out the cost of that revenue, giving us a total gross profit between $82 and $125 million. One more set of subtractions, the other expense bucket and the non-cash expense of depreciation and amortization, gives us a operating loss for AMC in any of these scenarios between negative $51 million and negative $9 million. The other big number that we need to subtract from the income is the interest expense, and I just have that at about $91 million for the quarter. That means that AMC is going to have a loss for Q2 somewhere in the neighborhood of negative 133 to, on the best case, somewhere around negative $91 million. I expect them to post a net loss in the neighborhood of $112 million, give or take a little bit. As I mentioned to you guys at the beginning of this year, the number one thing I was worried about with AMC in the first half of the year was going to be the cash burn and the needs of the company to potentially raise more cash. So that is something that we've been watching very closely, and we're going to talk about that real quick. Thankfully, Q2 came in even better than I expected, and the cash burn for Q2 ended up being lower than I was worried about. We had the cash raise that they did at the end of Q1 into the beginning of Q2, which is reflected here in the financing cash flow. But from an operating cash flow perspective, it's going to be a negative number between negative $118 million and negative 76. It's going to be my expectations, giving us a free cash flow when we add in CapEx of between negative $168 million and negative 126. Now, I'm just guessing at the CapEx. I have it at $50 million. Obviously, if they spend more or less on CapEx, then that number could vary a little bit. Net cash flow, when we add in the money that AMC raised in April, will be between $81 million and $123 on the positive side because they raised $250 million in financing cash. Some of you guys ask me from time to time, what about Hycroft? We look at the price of Hycroft at the beginning of the quarter and the end of the quarter. There was not any real meaningful change on the price of Hycroft from April 1st to June 30th, so I'm not really calculating in any meaningful impact on Hycroft to AMC's Q2. AMC ended Q1 with $660 million of cash on the balance sheet. They raised after that $250 million in April, and we have a little bit of cash burn here in Q2. So my estimate roughly for the cash position of AMC when they report Q2 numbers, we should see a number around $750 million. Another thing of interest is what is the current share count of AMC? Most of our brokers are showing 295 million outstanding shares. I have been carefully tracking the debt for equity offerings as well as the ATM offerings, and by my best count, the actual shares outstanding for AMC is 359 million shares. And when I compare that to some of the tools that I use like Dilution Tracker, they are also coming up with that same number, 359 million for the share count. If that math is correct, if that share count is correct using today's closing price of AMC at $5.46, that means that our market cap is just under $2 billion at $1.96 billion, not the 1.6 that our brokers are showing. The data consolidators that feed most of these brokers are often really bad about providing updates to share count based off of 8Ks on things like debt for equity swaps. So we will get the correct share count in the 10Q, and then you'll see the brokers update their sites several days or a week after the earnings release in August. Looking at the daily chart here, you can see those candles at the end flirting with that pink line coming down. That is our 200 moving average, and it is acting as a little bit of resistance. I'm going to be watching that very closely. If we can break through that, then there could be some bullish technical upside momentum. In the meantime, that 200 MA is acting as a little bit of resistance for AMC. I have run the numbers for all of the wide releases for Q3 and Q4, putting some estimates to how I think these movies are going to perform and comparing that to experts in the industry. And I don't want to overhype you guys, but I am really excited about the Q3 and especially Q4 numbers. Whereas when we began this year, experts were saying the box office was going to come in around 8 billion. I now see a window where we could potentially exceed 2023 box office. Yes, exceed $9 billion for 2024. That is now in the realm of possibilities. I think as this quarter and next quarter play out, there is going to be a lot of opportunity for the box office to drive up the prices of movie theater stocks in general. AMC is still struggling with this 2026 debt restructuring, and that is going to weigh on the price a little bit, and we're just going to have to see how this all plays out. We do know that management has told us that they need to attack and restructure that debt. So at some point, that is going to happen. If that means debt for equity swaps, possibly. More ATMs, I don't know, possibly. Less likely, I think. I'm leaning more towards the potential of debt for equity swaps to attack that 10-12% toggle debt that is on the balance sheet. If I was AMC, if I was in charge right now, I'd sit back, let the box office drive the price up, and then see if I can take advantage of a higher price in the market to further attack that debt ahead of a restructuring deal. That does mean for shareholders the potential for additional dilution, whether it's from a debt for equity swap or ATMs or both. Maybe neither if we're lucky, but that potential still exists out there. And I want you to keep that in mind as we get excited about the higher and higher box office into Q3 and Q4, that management is going to have some intention at some point to attack the debt that's on the balance sheet ahead of a restructuring deal. So continue to keep your head on a swivel and play it smart. On the bright side, if I exclude the impairment of long-lived assets, that non-cash expense, which always shows up in Q4, I think there's a very strong potential for AMC to report a net income positive for Q3 and Q4 in 2024. That means that the worst is now behind us if all goes according to plan. And based on current expectations for box office, 2025 and 2026 only look better. To make that happen, look for box office domestically over 2.35 billion. That's a number that I'm going to be hoping that the industry can achieve in Q3 and Q4 at a minimum. I actually think that we have a good chance of exceeding that number in Q3 or potentially Q4. Q4 being more likely. To sum it all up, Q2 better than we expected, better than I expected anyways. My concerns about a looming ATM offering are being reduced, seeing that the cash burn for Q2 is less than I was worried that it was going to be. Q3 and Q4 look to be very good. 2025 and 2026 even better. The only thing we got to get behind us is this debt restructuring, and people much smarter than me are saying that that probably won't happen till now, closer to the end of this year, maybe even early 2025. The better the box office gets, the better AMC's stock price gets, and if the Fed would ever lower the damn rates, the more advantageous it will be for AMC to finally take some action and get that debt restructuring done. And I want to just talk about debt before we finish up. Having debt on the balance sheet is not the death signal for a company. Most companies on Wall Street have debt on their balance sheet. The problem always is negative net income or not enough income to pay your bills and service that debt. So the important thing for AMC to do here is restructure the debt, push off that looming 2026 date 4 or 5 years so that you don't have to worry about that being right around the corner, and then get to a point where box office increases so that you can have positive operating income, positive cash flow, and hopefully enough income to pay your bills and service the debt. Don't let these people tell you that the company is going to fail just by having debt on the balance sheet. That is utterly ridiculous. But we do need to get profitable, and we have to have enough cash flow to pay the bills and service that debt, the interest expense. And like I saw someone say in Twitter, and I'm stealing this, I'm sorry, AMC is a bet on future box office. If you believe that future box office is going to increase and you think that the company will be able to restructure its debt, then buying AMC is like a call option on future box office. If the box office increases, like some of us that are more bullish on it think, then AMC's stock price should respond very well in the coming years. If the box office does not increase, if it just stays flat here at $9 billion, well, there is clearly going to be a problem. And you know what happens with call options when things don't work out the way that you expect. So that is kind of how I'm looking at an investment or a speculative trade in AMC. What are your thoughts about the box office? It's really that simple. And people are going to call me a shill and say I'm paid by AMC. No, nobody pays me for any opinions on this channel. But I am damn bullish on the box office. I love going to movies, and I hope if you are here that you do the same. Support your investment. Go see a damn movie. You know I'm doing it. I spend a lot of my entertainment budget on movie tickets and popcorn. If you guys have any questions or comments, please drop them below. I love to hear from you. I am Tony Denaro, and I will see ya on the next video.